Welcome to Investors Insights, episode 174. Today we'll be discussing what's the best opportunity to drive growth to finish the year. For our video watchers, we invite you to try listening to this same information on our podcast. Many people are discovering they like to listen to it while they drive or exercise. The links can be found on the right of this video. So with that said, let's get started.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from Five Land Partners.
Good morning, guys.
Good morning, Bobby.
Greg is out, so there's three of us. And so like I said, to open this, what's the best opportunity to drive growth at the end of the year? We've been getting a lot of questions from clients on that, and so we want to answer that. So let's start by talking about last week. Last week was very important because the jobs number handily beat expectations. And in that jobs number, we saw a couple of different things. Wages increased. Ashley, you're going to talk about that.
Right.
And then also the consumer. The consumer continues to carry the torch. As long as we have this consumer spending, I think everything will stay steady, including the economy and the markets. So actually consumer spending is up 3% from this time last year. And so really looking good with the consumer. Ashley, talk about the wage growth we saw in the jobs report.
Yeah, Bobby mentioned that. That was a good part of the jobs report. But the one thing we want a little bit of a caution, not one size fits all. When you look behind the wages, to Bobby's point, they're up, and that's good. Up's better than down in any situation. But in this particular situation, if you go back right behind the recession, most of the white-collar growth was right behind that. What we're seeing right now is a lot of blue-collar growth, which is great, but it's embedded for the most part in state and local governments and the increase in the minimum wage, which is good, and that will phase itself over the next 3 to 5 years and be a constant, but it's sort of with the lower earner. At the same time, we caution you many times when we're using statistics like that, it's not the same across the country. Internet situation in California right now could be far, far better than the Midwest can. So it's uneven, and that's probably a lot of the angst you still feel with the consumer. And with a lot of the white-collar growth that was early on, of course, they were going back and digging out from the recession and sort of catching up a little bit.
And that's done. It's in the past now.
Exactly. So, we like the growth, but you have to really focus on where it's coming from and how much impact it truly has.
Yeah, so the wage growth, job growth, and then also lower oil prices are really driving the consumer. Trey, talk about the job growth and the oil.
Right. Well, so we've seen the oil price drop, the price of oil drop around 20% from the peak, maybe a little more than that now. And it's finally bleeding into the gas pump. We're seeing low gas prices drop across the country. At this point last year, the average price of gas was 55 cents a gallon higher than where it is now. That's a huge boon to the average consumer. And what's interesting is you'd think that they may be savings that. At the initial point where we saw gas prices drop, we saw savings rate increases. The savings rate's now dropping. It's down to 5.3%. What that is, that's the average amount of the U.S. consumer saving at 5.3%. That's good. It's bad for an individual balance sheet maybe. Maybe people get a little more leverage, but from an economic standpoint, the fact that there's this much savings from a drop in gas, it's being spent back into the economy. That's very good looking forward. Could be potential for increasing earnings. And you have companies, U.S.-focused companies, consumer discretionary, consumer staple companies, those sectors could see a pop in their earnings due to this consumer spending, which is very good. Again, between now and the end of the year, we know there's not going to be any big government spending bill passed. We know that no company, we've seen that the capital expenditures, CapEx is down. No companies are making huge investments between now and the end of the year. So really the only option you have that could drive earnings, could drive markets is just the U.S. consumer. And this is pretty positive data right now that we could see that. And
so what is good about the consumer, as we all know, it's 70% of what is the market driver. So the one place we do have it good is in the place we really need it good.
Right. They've been really, housing has really been holding up. That's kind of flatlining. So you need to see individual spending. That's what's going to keep this market and the economy moving positive.
Yeah. So again, the best opportunity for growth to finish off the year is us, the consumer. And as long as this continues, we think everything will hold steady, including the markets and our economy. So thank you for watching. Please let us know if you have any questions. Thanks.